day all. Ira Epstein of Linn Associates with your agriculture wrap-up, and this is for Thursday. And we're at the 19th of December, 2019, about 2:10 p.m. Central Daylight Time. There will be one more update that I put out tomorrow. That'll be your weekend update, in other words, when we cover the week charts. And then I'm gone next week for my vacation. It's a good time to do it because we've got the Christmas holiday, short trading days, and then I will be back in the office on December 30th. So do look for me, and you will get your end of the week update tomorrow as well. So as we come together, we're waiting at the end of the day for the House to vote on the USMCA deal. We heard today from the U.S. Treasury Secretary Mnuchin that the U.S.-Chinese trade deal has been translated, put down on paper. There's no more negotiation, and it will be signed at the very beginning of January. So all this combined is pretty good, and the stock market is continuing on with its run. We're seeing a little bit of profit taking in the grains, and this makes sense. I mean, there's only so much grain that China can take in corn, wheat, or soybeans. Therefore, they'll start looking at DGEs. They're going to look at some Milo. They're going to look at other things. They'll look at what else they can buy to hit the goal that Mr. Mnuchin said will be made under this new deal. And as I understand it, it's near $50 billion a year. So that's quite a number. I yet have not seen the details, and nobody else has. So I guess we're going to be held captive to waiting for that particular moment. The USMCA deal is not due to be brought up in the Senate for passage of the vote until I believe we get somewhere into the impeachment trial. So it's sort of still held hostage. Remember that. When we look at a weekly area chart of closes, we've come up, and if you'll recall, I said we're into something of a resistance zone right here, and I haven't really changed my opinion on that. The market is still up 17 cents for the week. It is still over the 18-week moving average of closes in red, which means the bias of the market is still up. As you take a look on the daily bar chart, you can see how the market's run up and suddenly stalled a little bit as it got back into this zone right through here. From that November when we had started stepping down in prices. First we stalled out here, then we came down. And if I do this, you get a feel for it. You know, and sometimes it's fun to see how these things work. This is what I mean by the market was up, then it stepped down, then it left this area and broke down. Now, as that break occurred, the market, as it rallies up, old areas where a market stalls are often, it's not all the time, but often, an area of resistance, and I think that's where we're at. The market is certainly in an uptrend with higher lows, higher highs. The market is well over the 100-day average, and for a longer-term bull market, you'd want to see the 18-day moving average of closes on the daily chart over the 100. That setup is not in place. What I said yesterday, I think still holds. If the market breaks, this could be your first support area, the 920 zone, and if that gave ground, then the 18-day average closer to 910. What's the number that the market ran into with additional resistance? Well, it's not only this area that we pointed out. When you first got to the upper Bollinger Band, you managed to get through it another 2 days, but then you're starting to pull back a little. There's nothing that I see bearish here, but I am concerned that the market is still overbought. Now, overbought resolves itself in one of two ways. Either a market on the stochastic oscillator embeds, which means both numbers that make it up, the K and the D line, the red and the blue in plain English for you, have to go over 80 for several days in a row. So you have today where they're both over 80. You had yesterday, not the day before. Now we're going into a Friday. Will the market be able to embed over the weekend? We're all going to find out when I do my update tomorrow. And if that is the case until it's lost, it says that breaks in the market until that reading gets lost, which it's not there yet, but if it gets there, they should be shallow until that reading falls apart. In the meal market, I'll stick with what I teach. As I said, this was your first resistance. Then if you get through that, the Bollinger Band, often, best word I could use is often, the combination of the two is rather potent. And as you can see, the market went through it one more day, and now it's gotten thrown back pretty good. The powerhouse market is right here in the soy oil. And this is because China needs this soy oil. It needs it badly. So if they're taking beans from the U.S., which I do understand they are doing, they're crushing those beans for the oil sector much more than the meal. They may even sell the meal abroad. I don't know what they'll do with it. In the corn market, again, you hit this combination of the upper Bollinger Band 100-day average. That has given the market a resistance point. You're overbought as can be. You're going into a holiday shortened week next week, so we'll see what the market wants to offer from that. In the wheat market, I do realize, and you should realize, those first moves over an upper Bollinger Band. When I was a young trader, oh, the market's running, it's going to go away. And then as you get gray hair and you learn a little bit, you realize you have better shots often in the market to come in, and that's what this market's doing. Are we trending? No. You've got a lower low and a higher high in an overbought market. I don't care what it does. It's just not a trend as far as I'm concerned. In sugar, for those of you that get my morning report, I've been pointing out this does not act like a market that when it lost its embedded reading wants to make a run to this 18-day average of closes. Now, in my theory of how I create that is what's called a lost embedded slow stochastic trade. The number you don't want to see taken out is 1367 if you're looking at that. Why? Because you still have in place the higher lows, the higher highs, the bias is up. All that happened, and it's important, you lost the embedded reading, which often leads to price making a run at the 18-day average, but maybe you look back and say that was the run. In the coffee market, you had this crazy trade where, if you'll recall, and I was pointing this out, you had this huge decline, then you go up through that high, and as I was pointing out, in fact, go back and look at the videos. They're up there a couple of days ago. This was on Monday, this past Monday, and I said there's not even a target because you're overall the key numbers, and instead the market goes up one day, fails, starts collapsing again with the embedded reading, which often, sugar didn't do it, but which often leads to the 18-day average of close test. There you go. Pretty wild. In the cocoa market, here's your combination test of the lower Bollinger Band and the 100-day average. I will repeat what I said on the way up in the other markets. This is where I'd expect to see the pros lifting some shorts, but not because I'm bullish, because you're down into those key areas. The trend is down but oversold. Cotton market. Cotton is one of those commodities that you can get more purchases out of China on. And it's acting like it realizes that. It's back to the Bollinger Band. This is an area where I would not be surprised that the pros take some money off the table. The market has gotten itself overbought. Trend is up, bias is up. Cattle market fell right into the 18-day average of closes. We have a cattle on feed report coming up, and typically from this type of pattern, I look for higher prices. And the reason is the seasonality's up at this time of the year. You've come back to support. In the past, if you take a look at this time frame as to even going into that cattle on feed, the market often rallies afterwards. I don't know that it will or won't. I'm just pointing out what the chart is. You'd have to come back through this low right here, and that number is 124.35 to negate the bullishness. What I see happening is the market got overbought, hit this upper Bollinger Band. Now it's gotten back to the neutral part of it, and it's still in a bull trend. In the feeder cattle, a correction in prices, pulling back. Wouldn't be surprised if you get to the 18-day average, working out of an overbought condition. And in the hog market, still not going anywhere. Now, I asked our research department, why aren't we seeing hogs run more? They came back to me, and they're telling me that our 5 major packers in the U.S. have already forward contracted to send to China each month about $400 million worth of hog exports starting in January. I didn't know that. So if you went with that each month of the year, well, you could get up to $5-6 billion. So maybe there's just too many hogs around. The trend of the market is up, but you're in a resistance zone, haven't been able to penetrate that upper Bollinger Band and be able to mount a rush. Even if you did, again, the way I teach charting, I'd look for the combination of the upper Bollinger Band to the 7,200 level where the 100-day average is to be a resistance point. If you like what I do, it probably is a good time for you to get into our market research. Now, even though I go away on the holiday, I want you to know I often put out my morning subscriber video. If for no other reason, and it doesn't mean I'm going to do it like I do in Chicago at that exact time on vacation, but it keeps me so that up with the market, and therefore you're up with it. And when we come back right around the first of the year, which I'll be back and doing these on December 30th, I'll be writing again, getting you everything that you want, and away we go. My written updates look like this. They come out twice a day minimum. Today I did 3 of them because I had special updates that I was putting out. You also can get, if you try my research, what we call my daily numbers, how you place window envelopes on the charts. I do put out an audio commentary, typically twice a day, certainly once a day minimum, and you can get this all in a pretty cool way. How do you get it? Go to our website. You can sign up for a free trial. Don't buy it. If you haven't tried it, get the free trial. You can call my staff. They'll set you up as well. When you go to the website, you'll see free trials in the bottom right. Just click on that, and you can click right up here to get it as well. I'm Ira Epstein. You have a great day, and I will talk to you all tomorrow.